Good morning to all traders and welcome back to Market Insights. In this video today, I'm going to analyze the S&P, the dollar index, as well as the index in Hong Kong. Now, last week we've seen actually the month of May ended, right? So we had some increase in flows. We were expecting markets to be a little bit more risk off. Because we're expecting Mr. Trump to deliver his announcement against China's decision pretty much to impose a new legislation in Hong Kong. Mr. Trump was looking to, it was expected that he would retaliate. However, that wasn't really the case. The announcement contained no specific new measures. He did also threaten, like a few weeks back, that he would withdraw from the Phase 1 agreement signed in January. It didn't happen. So markets starting the week seeing this as a very good news. So they start upbeat. Risk is a little bit on, where S&P is moving up, Hong Kong index is moving up. The dollar index is a little bit unchanged, I would say, in the opening. And I see a bit more downside there. And that's because we have a warning eye over the civil arrest in the US, where US cities imposed curfews as the protests over the Floyd's killing are continuing, while at the same time we really need to consider social distancing. So really the process going to increase the coronavirus cases as well? That's another concern. Now at the same time we also have the jobless claims and also have the NFP at the end of the week. But until then, of course, we still have a lot of economic data coming out, including the ISM manufacturing and employment data today for the US and manufacturing PMI in general in Europe, Germany, UK, and Canada. So a very good start on the week. I think we're going to see volatility increasing today. So without further ado, I will just go ahead and start with the S&P 500 first. Now, if you recall, we were talking about this pattern for a while, actually, as a correction, part of the correction, right? W, X, and Y to rise up to near the 31.36. That's the 78.6 Fibonacci extension, retracement of wave W, right? Now, we'll have complex corrections. We do usually see the opposing correction, let's say, which is in this case this W, X, and Y, not the ABC, which is the X corrective wave. We usually see the 78.6 being reached. So for that reason, we were expecting that to happen. Now that seems to be nearing its end. Okay, so we talked about this being a W, X, and Y last week. Now with this, I'm expecting this wave, actually, this should be intermediate degree, not minor, and this should be minor. I just noticed. Anyway, this is 1, 2, 3, 4, and wave 5, because we see these corrective moves up and down. So that indicates, it can indicate two things. One, this is an ending triangle, so we start seeing prices moving lower once we take out a new high, a fresh high, and that could be near the 31.36, 31.60, or even last case 32.53. But I really see the end of wave B up here as the last stop, to be honest, and then start moving down. All the other cases, as 1, 2, 3, this is a corrective wave. 4 might be a triangle or something, and then we're going to get a 5 and then start moving low. But in either case, it seems like we're not going to extend much higher, okay? And this is what is important. So I'm personally expecting a decline quite soon. Now on the US index, finally we had the end of wave 4, and we're moving still downside, okay? I don't think we finished, and I will explain why. Guys, we're expecting this to end for how long now? Now the thing is that I've changed my view over here for this corrective wave. We're talking about WXY, Z, which is a triple zigzag. However, because we missed moving higher up here, this looks to me like a triangle now. Okay, this is validated as a triangle, actually not looks like. So after the break of this move, we had waves 1, 2, 3, 4, and this is wave 5. Now, if we look at the pattern of the structure of this wave, we have waves A, B, C, D, 1, 2, 3, 4, and we're expecting another move to the downside for wave 5. That will be the end of this ending triangle and the end of the intermediate degree move that we've been expecting for weeks now, right? and either wave A, B, and C, or 1, 2, and 3. In either case, I don't expect prices to move much lower down. I see the 61.8 Fibonacci extension being a very good rejection level at 97.82. Obviously, we could move a little bit lower. A false break is always expected. A false break below this trend line, right? And then once we get a little bit below, expecting prices to move higher. And let's just go on the Hong Kong index as well. Well, if I find it, yes, there we go. So I'm looking at this actually to being a part of a correction, okay? So just to give you a better idea, this is a W, X, and Y, okay? So we ended a very impulsive move up there a while ago. I see this as an A, triangle B, and wave C, which means also the end of wave Y. Now, with that being said, okay, well, I see 1, 2, 3, 4, and 5. This is a head and shoulders pattern which moved exactly down to the 61.8 Fibonacci retracement, which is always expected. So now I'm expecting prices to move higher. We had this gap opening to like 23.80 or so, so I'm expecting our prices to go to at least the 25.15 and above the previous high. In case we don't see that breaking above that level, then most likely we're going to see more downside, and then this scenario would be invalidated, which would seem to suggest that this is wave 1, this is wave 2, this is wave 3, this is wave 4, and it's going to be another wave 5 over here. That's going to be the end of wave C, the end of wave Y. So these are the two different scenarios. So this is all for the day. I want to thank you very much for watching, and I will speak to you again tomorrow